Hello traders, this is the final trading week of June and geopolitics will probably keep dominating headlines as everyone is anxiously awaiting Iran's response to the US strike over the weekend. But that's not all. Markets are also bracing for a double dose of volatility as Fed Chairman Jay Powell is heading to Congress for his semi-annual testimony just as the core PC inflation data drops this Friday. So will rate cut speculation heat up even further? And don't take your eyes off crypto markets. The king of cryptos, Bitcoin, seems to be trading more like a risky asset. Traders are not treating the crypto as a safe haven asset as many expected. So could this be a signal of something bigger ahead? So at this video, I'm going to present my analysis on dollar yen, the US 100 index, or otherwise the Nasdaq 100 index, and Bitcoin against the US dollar. And starting first with dollar yen, which is on the rise today. It's almost very close to its 200-day exponential moving average at 148.30 as everyone is waiting for Iran's response and the core PC inflation data at the end of this week. But probably Fed Chairman Jay Powell may also cause volatility ahead of the data. He has been President Trump has been pressing the Fed for lower interest rates, particularly after the central bank kept interest rates steady recently. So probably the Fed chairman may face some more pressure to cut interest rates. And it seems that some of the board members have already changed their opinion. Particularly, Christopher Waller has showed his preference for a July rate cut. So it's going to be an interesting week in terms of whether the Fed will change its mind about interest rates. Probably Jay Powell will defend the central bank's data-dependent approach. So if he retains his hawkish stance and inflation data surprise to the upside, well, that could provide more strength to the US dollar. And in this case, we will be waiting to see whether the pair can finally successfully overcome the resistance territory between 148.27 and 148.63. That's where the price peaked back in mid-May, and the 38.2% Fibonacci retracement level of this long-term up leg from 2023 to 2024 is also within the same region. So a successful penetration higher may boost market sentiment and probably drive the price towards the 149.60 or even higher towards the 151 level, which taken from the end of March. So that's where the price peaked post this brief upward pattern back at the end of March. Well, if you look at the technical indicators, well, it seems that the short-term bias is still skewed to the upside. The RSI is rising, the MACD is finally within the positive area. And however, if you look at the stochastic oscillator, although this is still rising, it's within the overbought territory. So that resistance region over here might be important to watch. If the price fails to close above it, then it could reverse lower to test the lower levels at 145.43 and then probably somewhere between 144.15 and 144.50. Now looking at the US 100 index, well, it seems that stock market hasn't been really shocked by the latest geopolitical events, or at least it hasn't really priced a serious escalation in geopolitical tensions. We can see that the price is still trading around its 20-day simple exponential moving average near 21,650. However, the short-term pattern is looking to be weakening. It seems that the price is within this short-term bearish channel, and we need to close above the 21,880 level to continue towards this resistance line over here, seen near 22,360. Probably the previous all-time high from February at 22,236 might also cause some consolidation, but overall the 22,360 region might be more important, a break of which could take us up to the 23,000 psychological mark. Well, perhaps such a scenario could develop if rate cut expectations heighten, if indeed the Fed, if indeed there is more pressure on the Fed about rate cuts, or if President Trump wins the battle over rate cuts, that could boost the market sentiment, as businesses are eagerly waiting for lower interest rates. But inflation seems to be an obstacle. So unless inflation pressures further heat up, probably the Fed may, rate cut speculation could heighten. Now, if geopolitics worsen, and if inflation rises indeed, we could see this downward pattern extending, and in this case, the next support could develop near the 21,000 level, while lower than that, the 20,425 territory, and particularly the EMA territory over here, could block further downside, a steeper decline towards the 19,740 region. And finally, looking at Bitcoin against the US dollar, trading over the weekend pressed Bitcoin below the 100,000 level. Briefly though, we can see that the price is back above this level again. But the market structure is now skewed more to the downside. We have a new lower low near the 98,000, and that suggests that Bitcoin is probably acting more like a risky asset. Probably traders took advantage of its high liquidity feature, since crypto markets are operating 24/7. So let's see whether this downward pattern will continue, whether Bitcoin will keep its risk feature intact. However, I think that we shouldn't rule out Bitcoin as a safe haven asset, particularly if monetary conditions become more uncertain, if indeed Trump's pressure about rate cuts will bring some confusion on the monetary front, if he indeed announces a new Fed candidate that could make monetary outlook uncertain. So in this case, probably Bitcoin may also act as a safe haven asset. So nevertheless, in the time being, the market structure, as I said, is skewed to the downside. The technical indicators over here maintain a downward slope, but the RSI and the stochastic oscillator are hovering near oversold territory. So a brief upturn or some consolidation cannot be ruled out. Nevertheless, if the price breaks below the 98,060 level, and more importantly beneath its 200-day moving average at 95,930, then we could see a pullback to 92,890. That was a key support territory back in April. On the other hand, if upside pressures increase, I would like to see a clear close above the 100,480 zone, while a rally above the 109,300 level could be more important, could be more meaningful, would push the price out of this bearish formation, and probably help the price to hit a new all-time high near the 112,800 level, or even higher up to, a break above this territory over here could boost the price significantly, likely opening the door to the 120,000 psychological mark. So that's everything I want to share about my analysis. Thank you for watching. I wish you liked my video. If you did, please subscribe to this channel. We will be back for more with more technical outlook soon. So stay tuned, and we'll be back soon. Thank you for watching, and see you next time.